right, ladies and gentlemen, distinguished guests and esteemed speakers, welcome to the Moneycontrol Global Wealth Summit 2025 in Mumbai. The city's relentless energy makes it the perfect stage for gathering the brightest minds in markets, business, and policy. And for the next session and for our next guest, let me invite back on stage Nalin Mehta for Moneycontrol.
Thanks very much, Sonal. Ladies and gentlemen, it is my great honor and pleasure to welcome to the Moneycontrol Global Wealth Summit the Chairman of the Securities and Exchange Board of India, Mr. Tuhin Kanta Pandey. It's just been a week since Mr. Pandey has taken office as the 11th Chairman of SEBI. And we are deeply honored, sir, that the Moneycontrol Global Wealth Summit is the first major event that you are gracing since taking charge of the markets regulator.
Our aspiration for a Viksit Bharat, a developed India by the year 2047, inspires us to march forward resolutely, propelled by 3 Ds: democracy, demography, and demand. India has exhibited resilience as well as strong growth momentum over the years as we face global headwinds in terms of geo-economic fragmentation, tariff issues, and elevated uncertainties. We need to build upon our resilience and strength to sustain our growth. A high level of sustained growth, low current account deficit, low external public debt, healthy bank balance sheets, fiscal consolidation roadmap, continuing government push on government capex and infrastructure, and forex reserve buffer are some key pillars of support for India's resilience against exogenous shocks. As per IMF estimates, overall economic growth in emerging markets and developing economies is projected at 4.2% in 2025, while India is estimated to grow at 6.5% in FY 24-25, indicating a strong growth outlook for the country among the peers. Indeed, many forecasts envisage that India will have a sustained growth of 6.5% over at least till the end of the decade, although we would like to accelerate it much faster in order to achieve the Viksit Bharat goal. In her budget speech on 1st of February 2025, Honorable Finance Minister has outlined government's vision, strategy and action plan, focusing on 4 engines: agriculture, MSME, investment and exports. She also underlined major reforms in 6 domains: taxation, power sector, urban development, mining, financial sector, and regulatory reforms. Let me just now come to the role of the security markets in economic growth. We are all aware, as over the years, Indian securities market has played a crucial role in channelizing savings into the productive investments, thereby fueling economic growth. Indeed, raising the savings and investment ratio has been one of the very important goals in the economic planning that we have. It's always provided a platform for businesses to raise capital efficiently through equity and debt markets, reducing pressure on traditional banking channels. And it has facilitated corporate expansion, promoted entrepreneurship, and contributed to overall economic development in the country. And let's see some data points. As of March 2020, there were 49 million unique investors in the SEBI ecosystem, which is now 136 million. Investors in mutual funds have risen 2.4 times in 5 years to 53 million from 22 million. Inflows into risk-oriented mutual funds during current year, which is April-March till January, are of the order of 5.3 trillion rupees. Over the last 10 years, Indian companies have raised on an average 2.2 trillion rupees per year through equity issuance in the securities market. The current fiscal year so far, April-Jan, has seen a record equity issuance of 4 trillion rupees, twice the capital raising of 2 trillion rupees witnessed in the entire previous year, FY 23-24. These are some of the key points. I think there are many. This access to funding through the capital market drives expansion, enhances productivity, fosters innovation, all of which contributed to economic growth. We need long-term capital through both equity and debt issuances as a source of stable funding, fostering sustainable economic growth. And new products like REITs, InvITs, and municipal bonds have huge potential to boost infrastructure development in the country. These products not only provide a diversified source of funding, but also reduce reliance on traditional sources of capital. Let me just come to some of the roles that SEBI is playing. Of course, in case of regulation, SEBI has provided the regulatory structure for REITs, InvITs, and municipal bonds, some of the new innovations. Over the years, SEBI has taken measures to promote developments of securities market, which is actually as one of our mandates, reduce risk in the system through effective regulation and protect the interest of the investors, and underline protecting the interest of the investors. Broadly, the reforms are aimed at enhancing efficiency, transparency, and robustness of the security markets. And we have used technology in a big way. Entire marketing infrastructure, securities market infrastructure, we have been bringing in technology and to facilitate things which we earlier couldn't even imagine. All reforms need not be big bang. Many a time, small reforms cumulatively are more effective. Going forward, SEBI will use a right mix to both to achieve the objective.
Now, while discussing India's road to a $10 trillion market, the foundation of its journey lies in how businesses are scaling and growing. Let's hear now from a finance expert on how financial planning, credit solutions, and microfinance can further be enhanced using AI and digital transformation and its role in India's growth landscape. Please join me in welcoming on stage V. Vaidyanathan, MD and CEO of IDFC First Bank, to take the stage.
Now, wealth management and multiplying the value of wealth, and because of all the reforms India is doing, is, of course, great for people who have the wealth, but people who are, let me say, just off their radar and having maybe even earning, say, 1 or 2 lakhs per month, saving maybe 20,000, 30,000 a month, even for them, that is wealth in their life. In fact, for them to multiply that amount of 20, 30, 50,000 or so is super important. For the rich, wealth is exciting. But for the not so rich, growth of wealth is an absolute imperative. Now, we can't afford it through relationship managers. We all know that because relationship managers are expensive. So there comes the whole concept of how India's digitization and digital ecosystem is going to enable this wealth creation, let me say, at the middle class, lower middle class, upper middle class, in this sort of ecosystem. You know, reforms and India's entrepreneurship and growth, all of these create wealth. Digitization of the new digital ecosystem in India can make wealth management more accessible to the 300, 500 million people of the country for whom it is equally important, like I said before. We are trying to make something called wealth management for all. So one of the things here is, say, invest in mutual funds. We are putting together a platform for public at large to say how you can do your own research. You do not have to follow IDFC First Bank's research about you buy this mutual fund or that. We provide you a platform. Say, for example, we say, okay, you can invest in equity. Within equity, supposing this is the fund that we've been talked about, in this fund, you're able to see what is the 1-year return on this fund, what is the 3-year return on this fund, what is the 5-year return on the fund. This platform is available for you to do your own research. You can live see what is the 3-year performance, 5-year performance of this fund. You can see the companies held by that particular fund. And then you say, okay, I want to invest in this mutual fund. You can say, I want to select this for one time. And then you can say that I want to say invest 1 lakh rupees. And then you say, I want to here to invest. And then you say, this is the OTP. And then you verify. And as we speak, this investment is done. Now think, to make the funds available on platform, you can sort them, select the best, and make an online investing. This is super important for the common people. And one of the agenda of this should also be how to make wealth management accessible for all, because it's important for everybody. Now let me give you an example of, again, people at this pyramid who typically would like to have, let me say, retirement planning. One of the issues that we find in India is that most normal people, certainly middle class, upper middle class, they live their life by the day and suddenly they are in their 50s or 60s or 50s and they figure out, oh, there's not much money left in the kitty, so there's need for financial planning. So we put together something for our customers here. You can come here, you can say you want to plan your retirement. In the retirement, supposing someone says, I want to say have 5 crore rupees retirement and say 2050, our system will instantly tell you through a tool that you really need 28 crores then, assuming inflation of 7% during this period, to actually have the value of 5 crores today, which is not a calculation customers normally have. And then we say, okay, what do you do with this money? So you say, get me investment options. In that, again, it's a choice customers are making. And then you say, okay, I confirm this plan. And then on 10th of every month, the bank will debit a bank account and move it in the fund chosen by you. Here is an OTP. Here you verify. And then your plan for that amount starts. Similarly, you can plan for retirement, home, car, etc. In the next 10 years, with the amount of reforms India is doing, with the amount of investment infrastructure India is doing, with the amount of ease of business, doing business focus, with the focus on digitization, with the creation of this entire ecosystem, one thing is certain that the Indian ecosystem is set for creating more wealth in the next 10 years, maybe by an order of magnitude between, let me call it 2.5 to 3x, if you were to go by the nominal GDP and you were to multiply it and compound it by maybe 11 or 12% for 10 years. Through these, we will be in a position to take this to let me say, middle class or even bottom of the pyramid, for whom even 10, 20,000 rupees is wealth. And we should realize that what is wealth for us, maybe 20, 30, 50 lakhs, is for the common people, even 10,000 rupees is wealth for that person. And our ability to take it there is going to really define the more inclusive wealth creation and using digitization to make wealth management accessible for all.
Indian real estate investment trusts, or REITs as they're called, are emerging as a strong alternative to equities and debt, offering fresh opportunities for retail and institutional investors. With the real estate sector poised for substantial growth, REITs provide high liquidity, diversification, and access to premium commercial assets. And that's what the next panel is going to explore.
From a investor's perspective, I mean, you have markets like US where I think 98% of the real estate market is REITs owned. India is what, 16 to, I think, less than 20%. So, I mean, the big question is, are there enough investable assets in the market? That's number one. And because we've seen with some of the big players, it's largely recycling of capital in many cases. Are there enough assets? If yes, I mean, the competition is only expected to grow among all of you, So how do you get control? I mean, that's one question. And are you also open to creating more greenfield assets? Because it also has a larger multiplier effect on the economy. Maybe Alok ji can answer, and then Ramesh can also join.
Yeah. So I would. So good question. Today we have 3 office REITs and 1 retail REIT. Now, while in terms of percentage, we are saying 75% is office, but office will continue to dominate because among 3 office REITs we have 100 million square feet. And the retail REIT, we have about 10 to 12 million square feet. So when you talk about assets, I think we have, more office REITs are going to come. Retail REITs are also going to come. Both are getting more popular. We are going to have data center REITs. We can have hospital REITs. And if India, which is very, very early days, if we can have residential REITs, I think that can really add to the pool. But what I would like to say here is, see, now in India, we have 10% of real estate is in REITs, about 10 to 12%. If in USA, it's about 98%. In Europe, it's about 50%. Now, in next 20 years, Indian economy is going to be about 20 to 25 trillion, and the real estate could be about 4 to 5 trillion, which is the present size of economy. So the real estate would grow, and the 10% which is in part of REITs could go up to 50%. So the REIT AUM can almost become more than 50 to 20 times or even more in next 15 to 20 years. So that's a kind of a growth. I'm talking about macro level, but that's a kind of a growth we can, we can expect. And of course, new assets will come up, new sectors will open, and REIT has very, very strong potential to grow over next 15 to 20 years.
All right, India's economic resilience and consistent growth story has set us apart, and yet foreign investments largely flow through emerging market allocation, trying its fate to emerging markets peers like China and Russia, which have fallen off the global investors' radar. Now, given this, can India redefine itself as a standalone asset class, attracting global investors independent of the emerging market tag?
Are we getting more foreign money or not? That's my simple question. And I don't know, anyone wants to start off with that? Okay.
I'm happy to start off again. Thank you so much. Let me just come back to where I started. Norway is a very small country, but we are a rich country. We are a rich country because we found...
Sovereign Wealth Fund of Norway, over $300 billion in assets
we have
right
the
now,
biggest sovereign wealth fund in the world. And this is because of, these are the revenues from our oil and gas in the North Sea. And we decided that we wanted to spend this to safeguard wealth for the future generations. And then basically, what are the principles of this fund? It's to get the highest possible return for the future with an acceptable risk. It's a very conservative fund. I am not deciding anything. The Norwegian government is not. They are quite independent and independently run. But we can see what they are doing. And then they are quite conservative. But I already mentioned they have tripled their investments in India in the last 5 years, and I also think that will continue with the growth rates that we have seen, and also India is a democracy. It's a country that we as Norway talk very well with. We have very good relations. There is no prospects of any trade wars. We have the free trade agreement, as I mentioned. So that's why I think it will grow. It will grow on the foreign portfolio investments that the Sovereign Wealth Fund is looking at, although not decided. But I'm talking a lot also to Norwegian businesses on FDI. It's my task also as a Norwegian government representative, according to the free trade agreement, to promote investments into India. And they are saying that they are looking to India as a very interesting market now. And so that's why I believe it will grow.
Okay, again, fantastic news. And actually, the Indian government is also, in the Indian regulator, is very welcoming of sovereign wealth funds in general. I mean, a lot of our regulations are perhaps stricter for other categories of FPIs, but sovereign wealth funds, I mean, they're more than welcome in this country. So thank you for that perspective.
May I just say one more thing, and that is we also have another fund, government fund called Norfund. We decided to have a climate investment part of it just 3 years ago. And about just more than half of that climate investment is being done in India. And why is that? It's because there are very high ambitions here from the government on green growth. And at the same time as there is a good climate, this is compared to other developing countries. And that's why they can invest in solar, wind, the green grid.
So Vishal, now we have to fight with US tech, and now we have to fight with Chinese tech. There's US exceptionalism. There's Japan. Now Germany is rearming, and maybe the economy starts, looking better. So we have to compete with a lot of people out there. How are we stacking up? How much money can we expect?
So look, I'll be very brief and quick, but I'll break it up into two parts. India should attract a ton of foreign global capital. There's just no question. Ask yourself, which economy in the world has the chance to be the next $10 trillion economy? Which economy? There's only one. Sorry, I'm not being biased. Really, if you ask anyone, it's really India. But because India can become a $10 trillion economy doesn't mean it will. And sitting outside India and looking at opportunities to invest across in different places now, despite my having spent so much time in India and my love for India, I have to say, there are other places to invest. So the opportunity doesn't mean it's destiny. And therefore, we have to be on our toes. I don't know whether it's tax, I don't know whether it's regulation, but I think if we are welcoming and realize, let's put out the red carpet because everyone else is. In an uncertain time, everybody wants global capital to flow in. And if we do that, I think there's just no question because everyone's looking to India. They just want to sign. They want to say, we are welcome, we feel welcome, we want to be there.
We've discussed tax and currency a fair bit. Regulation, you mentioned. Is there something outlying? Though, I mean, the regulators tell us that a lot has happened, easier KYC norms, etc., easier disclosure norms. But is there still something that needs to be addressed and resolved?
Look, I think we need to constantly get better. Our companies need to constantly get better. We at Warburg Pincus need to constantly get better because it's not a static world, right? So yes, we've done a great job, government, regulators, everything. Everyone can complain about small things, but everyone else is doing the same. So we got to keep on our toes is all I'm saying, because everyone's interested in India. There's great reasons to be interested in India, but we have to just keep staying ahead of the game to attract that capital.
Ankur, your thoughts? Real assets, hard assets here in India, whether it's real estate, infrastructure, what is the kind of interest they'll continue to perhaps generate in terms of foreign capital?
A lot of my fellow panelists talk about the large macro, whether it's China competing, China +1, giving India the advantage. I think as I always say, we look at the macro, but what really matters for an investor is the micro, whether it's a particular company that has a specific growth plan, whether it's a sector that we like, whether it's a particular theme in the context of so many things, so many variables that make up our country. And I think we have to be very conscious of what is behind the 6.5% or 7% growth. What is behind the 4 to 5% inflation? These are macro trends over a population of 1.4 billion, over an economy that's $4 trillion, and at some point, hopefully soon, we'll be $10 trillion. So I think micro matters a lot more, which is where I think capital formation. Tomorrow, stock markets can go very high, but if you see no IPOs, no QIPs, no new companies getting formed, then that would mean that there is a bubble, because then there is no underlying capital that's supporting that growth. So I think that particular aspect of real asset investing comes in. I'll give some context. The ratio to commercial real estate in the US to GDP is almost 1:1, which means investable commercial real estate in the US is about $20 trillion. In India, that number is less than $1 trillion, maybe if I'm being generous, $500 billion. So if Vishal is right and we become a 10 trillion economy, then we'll have to go 20x. So 2x in our economy or 2.5x in our economy means that commercial real estate, which is offices, hotels, malls, all of the good stuff, and infrastructure, which will move from hopefully public hands to private hands, these will be 20x. So 2.5x in macro could result in a 20x change in the way micro investing in real assets itself could work. I think that is the real question. How will our savings move into investable classes of earning slightly better? Norway is investing in India because they want to earn a little bit more than more mature economies can offer to them. Investing in China could come back, but it will be a very long time before investor confidence in the macro comes back. Mm-hmm. So I'm linking it back to the micro and the macro. We can do a lot of missteps in macro. That can have a micro impact, but investor will always look at that particular situation, that particular company, maybe that particular sector. And that is very important for us.